So hello guys, welcome to a new video of the Sill Trader, and in this video we are going to be discussing about what is fundamental analysis and how we can do it in the 3 easy steps. So let's get started with the video. So first we'll talk about what is fundamental analysis. So fundamental analysis is basically a holistic approach to study a business when we wish to invest in a company for the long term. Because when we wish to invest in a company for the long term, it is important for us to separate the daily short-term noise in the stock prices and concentrate on the underlying business performance. Because over the long term, only a fundamentally strong company performs good, and we cannot predict the long term by just watching the charts, which is technical analysis. Let's come to the first step, which is analyzing return on equity. So what is return on equity? Return on equity is basically the return on the money which is invested in the company by the shareholders. We should only invest in companies in which the ROE has been increasing from the past few years, and it has not been stagnant, and it is not declining, and it should only be increasing. How much ROE is good? We should at least aim for 20%. And how many years to consider? We can make our analysis easier by just taking the 5-year average, and the 5-year average should be more than 20%. It means that the company is performing nicely in the market and the growth is increasing over the last 5 years. Now the second step is analyzing dividend. What is dividends? So what are dividends? Dividends are basically the money which the company distributes to its shareholders, because the shareholders are also part owners of the company, so they also deserve, if the company is making profits, they also deserve part profits from the company. So when a company earns profit during a financial year, they distribute it they distribute a part of their profits to the shareholders as dividends. Now, how can we analyze dividends? We can analyze the company's dividends by watching their past performance, that from last how many years that the company is being given dividends, and is it increasing or not, and how much is the dividend is the now dividends are also of two types: interim dividend and final dividend. Interim dividend is given in the middle of the year at any time, and final dividend is always given at the end of the year. Down, what if the company doesn't give dividends? There are some companies which do not give dividends and just reinvest all the profit earned in the company to expand their growth. So there we should in this case we should look at the retained earnings, because retained earnings are the profits that the company has earned and have reinvested in themselves. Now let's get to the third step, which is shareholding pattern, and it is also a very important one, because in the shareholding pattern we get to know about who owns the company. Now promoters are the founders and the family of the company, and they have started the business. For like in Adani group, the in all the Adani shares, the promoters are the Adani family, and they have major stake in the business. And FII and DII, I have explained them in my first video, which are in the first YouTube video, which is the basics of stock market. Now let's talk about them. FII and DII are the smart investors, and they are the big players in the market. So FII and DII always invest in the companies in which they see some growth aspect. Now the FII and DII should always be increasing over the last few years, and an FII should be more than 10% in a company. Now pledging is one of the most important aspects, because in this step only we can get to know about whether the company is doing well or not. The pledging is basically, if a company's promoters goes to the bank to take some loan for the company, then 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 he or she will give their shares to the bank as securities. So that means that the business is not doing well, and if the business is not doing well, then they will not be able to repay to the bank, and we will ultimately lose our money. So pledged shares should never be more than 25%. Now these were the main 3 steps, and if we go according to these 3 basic steps, then it is very unlikely in our favor that we might fail in our long term investment, because these are the only main things that we should consider. Now there are also some other things that we should consider: our financial reports, debt to equity ratio, it should always be less than 1%, and the future of the company, that if that company has some growth opportunities in the future or not, what are the company's competitors, if the competitors are better than this company in which we are planning to invest or not. And last one is to stay updated, because we have to keep a track of our investments. So we should not, I'm not saying that we should check it daily, but at least we should check it twice a month. so that we can keep a track on our investments. Now let's analyze three companies. Now the first company which I'm going to analyze is HCL Technologies Limited. Now I have come to Money Control. You can use any site like Money Control, Stock Edge, or ET Market to fundamentally analyze any company. So what we have to do is we have to first go to the financials of the company to check our ROE. It's here, ROE, return on equity. So from the last five, it's already showing us from the last 5 years, and we also want to consider only last 5 years only. So let's check. In 2018 it was 23, 24, 21, 18. It was because of the COVID crash the ROE declined, but after that also it increased. So it means that the company is performing good. Now let's find out the average of the 5 years ROE, which is 23.96 plus 24.46 plus 21.56 plus 18.6 plus 21.8 divided by 5. So as you can see, it is coming equal to 22. So we have passed our first step, and that we can invest in this company based on the ROE. Now let's get to the second step. For the second step, we need to go to the corporate actions, click on dividend, and click on see more, so that we can check from which year the company has been giving. So now as you can see, from the last 20 years that this company has been giving dividends, interim and final also. So that also is a very good thing. And now we have passed our second step also, because the company is giving dividend 5%, 500% of dividend is not that bad. Now let's check our third step, which is the shareholding pattern. As you can see that the promoter stake is just same, it's not increasing, but it's good, as the company, as they have 60% of the holding. Foreign investments have been declining, and but domestic institutional investors investments have been increasing, and the public has, and there are no pledge shares according to this site. So this stock looks good for for a long term investment, as you can see to the fundamentals. Now the second stock is TCS. Now let's get to the financials. ROE, it is ROE is more than 20% from the last 5 years. The last 5 year average is 36%, which is very good according to our steps. So we can invest in this company according to our first step. Now let's check the second step, which is dividends. So for that we need to go to corporate actions and click on dividends, see more, so that we can check from which year the company has been giving dividends. Scroll down, so we can see from the last 18 years that this company has been giving dividends, consistently giving dividends. So that also is a very good thing, and it's also giving interim dividend and final dividend. So this company is also fundamentally very strong. Now let's check the shareholding pattern. Promoters have major stake, which is 72%. Foreign investors have 13%, which is also very good, because it should always be more than 10%. And domestic investors or stakes is also been increasing from the last 3 years, from the last 2 years, and they also have 8%, which is not bad. Public has 5% of the shares. So TCS is also a very good stock for long term investment. Now let's get to our third stock, which is Asian Paints. Let's go to the financials to check the return on equity. Return on equity is more than 20% from the last 5 years. Let's check the average of the last 5 years. So the last 5 year average is 24.03%, which is also very good. So we have passed our first step in this company also. Let's check the dividends. So this company has also been giving dividends from the last 20 years, which is also a very good thing. And the dividend and the amount has been increasing also. So that also is a very good thing. Now let's check the shareholding pattern. The promoters have major stake, which is 52%. Foreign institutional investors also have 18.5% in the company, which is very good, because we should consider only companies that have foreign institutional investors shareholding pattern more than 10%. DII also have 8.5% share in this company, and the public has 20% in the company. And the promoters of this company has also pledged their shares, but they are very less in number because there are only 9.3% and 10%. For us, the deadline is 25%. If the pledged shares are more than 25%, then we will not invest in the companies. But now Asian Paints also is a good stock for the long term. I hope you guys learned something from this video. Thank you for watching. If you like the video, please make sure to give it a thumbs up and do subscribe the channel. Thank you for watching.